Methinks oil is going down, methinks. I haven't heard from methinks in a while, although he does send me some emails about the unrelenting bull in the stock market. But that's just a matter of time. We're very close. I'm right on everything. I'm always right. I'm right on everything. Oil's going down. I forgot to mention earlier we had a couple of pieces of economic news. We had initial claims for unemployment benefits up. That was up 14,000 to 257,000. That is the highest in 4 weeks. Okay, the 4-week moving average came down a little by 500, but that'll swing back up because now that weekly number up to the highest level in a month. People filing for unemployment insurance. What is that all about? What is that all about? We had durable goods orders. Actually, pretty good number. All right. So we had a pretty decent quarter, first quarter in terms of durable goods orders. So that would fall into the component of business spending and investment, right? Gross private domestic investment. So you might see a little uptick in the forecast for tomorrow's. Remember, tomorrow is the first quarter estimate of GDP. I didn't look at Atlanta Fed's GDP now, but the last I looked a couple of days ago, it was 0.45 growth. Me personally, I'm looking at 0.9. That is my forecast. Okay, under 1%. Remember, the third quarter of last year, we were growing at 3.5%. Then in the fourth quarter, we slowed down to 2.1%. Now we're maybe at 1%, but we'll see what the first reading is tomorrow. By the way, in that durable goods orders report this morning, and if you take the 3 months combined, January, February, March, it was up something like 12.4 billion. That's a decent amount, okay? That's a decent amount of orders, new orders. However, if you strip out the transportation component, it was only up like $1.5 billion. So nothing much. And a lot of the stuff was related to military. A lot of the stuff was, it's still part of the economy. I'm not saying to discount it. Just goes to show you that you're not really seeing. Computers were down, machinery was down, all the other stuff that you would think would, or which is a more of a barometer of the general economy, wasn't so hot. Okay, what was strong was transportation, aircraft, and military, but it still counts. It still counts. That just kind of describes the composition of our economy. We know we spend on war, we spend on military, so you're going to see that. So you have that, okay? And that's about it, really, for now. We'll keep an eye on the oil market. This could be the beginning of a big decline, folks. Could be. There's something, I have to say, there was some things in that Energy Information Administration release yesterday, the weekly, inventory release, that there were some positive things in there, all right? But the situation to me looks like refiners are going crazy buying crude and pumping out product. Meanwhile, product demand is falling, and after a long period, 9 or 10 weeks of declining inventories in gasoline and distillate, the inventories are starting to build back up now. So you've got support in the crude market from refiners at a record level of inputs, okay? But that's going to fade because they're going to see the inventories rising, demand is falling, and they're going to say, well, we better stop producing so much, and then that's when the bottom could really cave out. But that might take, another week or two. All right, that's it for now. See you later. Bye-bye.